In this video, I'm going to share with you 4 Singapore stocks that are hitting 52-week highs and showing strong earnings. Let's get into it. Hey friends, welcome back to the channel. I'm Iggy here, and I've been covering topics such as stocks, finance, CPF, and basically everything related to growing your wealth. The Investing Iguana is featured and ranked 8th in the 2023 Influential Tigers by Tiger Brokers, with over 800,000 reads. I've also covered over 500 videos and over 250,000 watch hours as of September 2024. I occasionally focus on topics related to regional or world economy too. Today, we're diving into an exciting topic, Singapore stocks that are not only hitting their 52-week highs but also showing impressive earnings. This is a great way to find potential additions to your portfolio, especially with the Straits Times Index recently hitting a 17-year high. But remember, it's not just about the stock price. We need to look at the business performance too. Strong earnings momentum is key for continued stock performance. Let's start with PEC Ltd. PEC Ltd, traded under the ticker 92, is a specialist in plant and terminal engineering, catering to various industries including oil and gas, petrochemicals, and pharmaceuticals. The company has demonstrated remarkable financial growth, with its stock reaching a 52-week high of 65 cents and a significant 23% increase in value this year. In their fiscal year 2024, PEC's revenue saw a substantial 14% growth, reaching 491 million Singapore dollars, while their net profit more than doubled to an impressive 16 million Singapore dollars. A notable highlight is their ability to generate positive free cash flow, indicating a healthy financial position. As a token of appreciation, PEC distributed a total dividend of 0.035 Singapore dollars to shareholders, a considerable increase from the previous year's 2 cents. Furthermore, their order book stands at a robust 52.5 million Singapore dollars, and the company is actively pursuing additional projects in the Middle East and surrounding regions, showcasing their aggressive expansion strategy. This upbeat performance and promising outlook make PEC Ltd an attractive prospect for investors. Next up is Singapore Exchange Ltd. Singapore Exchange Ltd, also known as SGX, with the ticker symbol S68, plays a vital role in the financial landscape as the sole stock exchange operator in Singapore. The company has experienced significant growth, with its stock recently reaching a 52-week high of 11 Singapore dollars and 85 cents and a notable 20% increase in value this year. In their fiscal year 2024, SGX reported a 3.1% rise in revenue, totaling 1.2 billion Singapore dollars, accompanied by a 4.5% increase in net profit, reaching 525.9 million Singapore dollars. Demonstrating their commitment to rewarding shareholders, SGX has increased their quarterly dividend to 9 cents per share. Looking ahead, the company is strategically positioning itself to capitalize on the burgeoning growth of China and India, anticipating a surge in futures and derivatives volumes. Additionally, SGX is experiencing robust momentum in their foreign exchange platform, further solidifying their position as a key player in the region's financial ecosystem. This optimistic outlook and strong financial performance make SGX an attractive prospect for investors seeking exposure to the Singaporean market. Our third stock is ASAS Systems Holdings, ticker BBW. ASAS Systems Holdings, traded under the ticker symbol BBW, is a prominent IT company specializing in the design and implementation of software and systems. The company has demonstrated remarkable growth, with its stock recently reaching 10 Singapore dollars and 95 cents, representing a 28% increase in value this year. ASAS fiscal year 2024 was particularly impressive, with revenue soaring 30% to 328.9 million Hong Kong dollars and net profit skyrocketing 68% to 85 million Hong Kong dollars. This robust financial performance has enabled the company to generate strong free cash flow, which has in turn allowed them to substantially increase their dividend payout to shareholders. Looking ahead, CEO Michael Yap has outlined ambitious plans to expand ASIA's geographical footprint and invest heavily in research and development, focusing on creating innovative new products and services. This strategic focus on growth and innovation positions ASIAS for continued success and makes them an attractive prospect for investors seeking exposure to the dynamic IT sector. With their strong financial foundation and forward-looking approach, ASIAS is well-positioned to capitalize on emerging opportunities and drive sustainable growth. Lastly, we have Tiong Woon Corporation, traded under the ticker symbol BQM, a renowned integrated heavy lift specialist catering to various industries including oil and gas, petrochemicals, and construction. The company's stock has demonstrated steady growth, recently touching 54 cents, representing a 14.1% increase in value this year. In their fiscal year 2024, Tiong Woon reported a 5% rise in revenue, reaching 143.1 million Singapore dollars, accompanied by a notable 16% increase in net profit, totaling 18.2 million Singapore dollars. This robust financial performance has enabled the company to increase their dividend payout to shareholders while also generating positive free cash flow. Management is optimistic about the resilient demand for their specialized services in Singapore and is actively pursuing new opportunities in the construction and petrochemical sectors. With their strong industry expertise and strategic focus on growth, Tiong Woon is well positioned to capitalize on the ongoing infrastructure development and industrial activities in the region, making them an attractive prospect for investors seeking exposure to the engineering and construction sector. Now, let's break down why these stocks are worth watching. First, they're all hitting new highs, which shows strong market confidence. But more importantly, they're backing up these price movements with solid financial performance. We're seeing revenue growth, profit increases, and in most cases, higher dividend payouts. These are all positive signs for potential investors. However, it's important to remember that past performance doesn't guarantee future results. While these stocks look promising, you should always do your own research and consider how they fit into your overall investment strategy. Look at factors like the company's competitive position, growth prospects, and any potential risks to their business model. It's also worth noting the diversity of these companies. We've got an engineering firm, a stock exchange, an IT company, and a heavy lift specialist. This shows that there are opportunities across various sectors of the Singapore economy. For those of you interested in dividend investing, it's encouraging to see that all these companies have either maintained or increased their dividend payouts. This suggests that management is confident in their future cash flows and committed to returning value to shareholders. Remember, when looking at stocks hitting new highs, it's crucial to understand what's driving that performance. Is it just market hype, or is there fundamental business growth backing it up? In the cases we've discussed today, we're seeing real business improvements supporting the stock price growth. As always, diversification is key. While these stocks look promising, it's never wise to put all your eggs in one basket. Consider how these or similar stocks might fit into a well-rounded portfolio that aligns with your financial goals and risk tolerance. If you guys enjoyed this video, then you're going to love my video on SGX Dividend Truth, Powerhouse, or Time Bomb. In that video, I dive deep into the dividend stocks on the Singapore Exchange, exploring which ones are reliable income generators and which ones might be ticking time bombs for your portfolio. It's a must-watch for anyone interested in dividend